Hello and welcome to another episode of the Rabbit Hole Investor. Today I'm going to be talking to you about the Coinbase IPO, or DPO rather, and tell you why I personally chose not to invest at the initial public offering at least. So before I get started, if you could take a second and tap the like button, I would really appreciate that. And while you're down there, go ahead and tap subscribe, turn on the notification bell. I do plan to make a lot more videos, so I'd love for you to join when future content comes out. So I first want to say that I was honestly highly anticipating the Coinbase IPO, and I was really looking forward to buying the stock and holding it probably long term, but that's when I was expecting it to come out at a price of around maybe $60 to $80 per share, or at least under $100. And that's really where the bulk of my concern lies, is with the price. Now, first we should make mention that the price per share is not necessarily an indicator as to whether the stock is overvalued or overpriced. Really, there's some other metrics that you want to look at, but first you should start with the market cap, which is simply the price per share multiplied by the total shares that the company has. So for example, if we were to compare GameStop and AMC, GameStop has a price of about $150 right now, and AMC is around $9 per share. Now, on the surface, it may look like AMC is worth, 1/15 or less than that of what GameStop is, but actually, GameStop has significantly less shares than AMC. So that's one of the reasons why they're a perfect candidate for a short squeeze. So at that current price, GameStop has a total market cap of around $10 billion. Meanwhile, AMC, at a significantly lower price per share, their total market cap is about $3 billion. So realistically, AMC would only have to go up to around $10 a share, maybe a little over, to match the same market cap as GameStop. So now that we have that covered, let's get into Coinbase and the numbers. So Coinbase came out at about $380 per share, representing a market cap of about $75 billion. Now, to put that into context, Coinbase has a revenue of about $1.2 billion. So it would take Coinbase about 60 years or over 60 years to make in revenue what their market cap is. Now, naturally, their revenue should increase, and it does have potential to go up dramatically, but still, that is not a good ratio at all, and I think you'd have to be very optimistic to have bought in at that price. If you were to compare this to, let's say, Apple, which I think has the highest market cap of any publicly traded stock, their market cap is about $2.2 trillion, and they have a revenue of $275 billion, which means that it would take them 8 years to make in revenue what their market cap is. Now, let's take a look back at another highly anticipated, hyped up IPO with Facebook. When Facebook went public in 2012, they had a revenue of around $5 billion, so roughly 4 times that of Coinbase. Now, Facebook came out at a price per share of $38 and shortly peaked after that at around $45, and that represented a market cap of around $100 billion. So not a whole lot higher than what Coinbase came out at, and that's based on what they came out at. I think Coinbase actually hit around $100 billion market cap. Also shortly after, their price went up into the mid fours, not too long after they went public, and then started to come back down. Now, Facebook, shortly after peaking at around 45, went down pretty quickly, and I think bottom out around somewhere in the $17 range. Now, this is really, honestly, just a rudimentary way, a quick way you can look and calculate and kind of try to get an idea as to whether a stock is overpriced or not. But really what we're doing is we're looking at the PS ratio. And the PS ratio you get by taking the total market cap and dividing that by the company's revenue. And that will give you their PS ratio. And the smaller that number, the better. So some investing firms out there would consider a good PS ratio of maybe 1 or 2, or at least under 5, which honestly companies with that kind of ratio are not that easy to find, at least in this current kind of market. Now, Coinbase, at the $380 that they came out at and a $75 billion market cap, that represented a PS ratio of over 60. So far from what would be considered a good ratio. And if we were to compare that to the top 10 stocks, publicly traded stocks in the US by market cap, they have an average PS ratio of around 10, or maybe a little over, quite a few in the low, 4, 5, 6 range. And I think Tesla has the highest or second highest. They're around a PS ratio of about 20 or so. Not exactly stellar, but those companies also are much larger. They've been around a lot longer, they're more reputable, and for the most part have long, steady, consistent track records of increasing revenue. Now, PS ratio certainly is not the end-all, one-stop shop on determining whether a stock is a good value or not. It doesn't take into a lot of important factors, such as what their debt is. It doesn't look at future products or services, or any future catalysts that may drive the price up or help to grow the company in a short period of time. So before I go into a couple other reasons why I'm not particularly bullish on Coinbase right now, it is important to note that a company's stock is sort of like a market or product in and of itself, in that the value of the stock does not have to represent the company's revenue, their earnings, their debt, any fundamentals, how they're performing currently. Really, the value is determined based off of supply and demand of that stock. So as we've seen with meme stocks this year and starting last year, the value of a stock can skyrocket simply because people like the stock, or stonk, if you will. So a couple other concerns that I have about Coinbase. First of all is that they don't actually have a substantial number of altcoins available to purchase on their platform. I mean, they don't even have my favorite cryptocurrency, Dogecoin. So what's with that? And although they have about 50 million users, that doesn't necessarily mean that those users prefer Coinbase as their method for trading cryptocurrency. So I, for example, am technically a Coinbase user, but I only have about maybe 2% of my overall portfolio on their platform. And that's because they don't tend to have the altcoins that I want to buy and trade. And also, in my opinion, they're actually really expensive to trade on when you compare them with some of the other platforms that are available. My two preferred platforms for trading cryptocurrency are Crypto.com and Binance, and both of them represent a much larger selection of altcoins to purchase, and they also have much lower fees for trading cryptocurrency. So with all that said, I do actually want to touch on some of the positives and finish on a high note for Coinbase. So first is that they are already profitable as a company. And sure, it may be because they have really high fees compared to some of the other trading platforms, maybe not, but nonetheless, they're profitable. Second is that most people don't actually own any cryptocurrency, although there is much more interest now than there ever has been. The vast majority of people still do not own cryptocurrency. And although on the surface that may seem like a bad thing for Coinbase, it's actually a good thing, because that represents significant opportunity to increase their users and increase the number of people buying cryptocurrency, especially now as it becomes more mainstream. And that could potentially represent significantly increased revenue for them. And that would definitely help out some of the things like the PS ratio and the PE ratio and some of the other fundamentals that we might look at. The third thing is that, in my opinion, of all the platforms that I've used to trade cryptocurrency, excluding Robinhood, they have really the best user interface. And again, that's just my opinion, but it's really clean, it's really simple, easy to use, easy to understand. So that's a huge benefit that they have going for them, especially if they're trying to attract new users into the cryptocurrency space. And then the last thing kind of goes along those same lines, is that they're about as mainstream as you can get for a crypto trading platform. Again, excluding Robinhood, and the reason I'm excluding them is because they're just an exchange and they're not actually a cryptocurrency wallet yet. So hopefully that's coming soon, but we'll see when that happens. So yeah, they're profitable. There's a lot of opportunity to grow their users. They have a really great user interface. They're very simple to use, and they're mainstream. So those are some of the positives that they have going for them. I honestly do like them. I hope that they're successful, and I'm sure that they will be. I just think that the price of the stock is overhyped and overvalued currently. But if it does keep coming down, which it has come down quite a bit since their initial public offering or their direct public offering, if it keeps going in that direction, then I'll probably buy into it at some point. Before we wrap this up, if you haven't done so already, go ahead and go down and tap the like button. Feel free to subscribe and turn on the notifications. I do plan to have a lot more videos coming out in the near future, and I would really love to have you join the Rabbit Hole Investor community. Thank you for watching. Help out the cryptocurrency market and no. Cut. That's a wrap.